Welcome back. You're watching Market Fatafat on ET Now, a show where we get you all the stocks buzzing based on news flow as well as on technicals. And talking about technicals, now we have Osho Krishan joining us on the show. Very good afternoon to you, Osho. Thank you so much for joining us on ET Now. And the first stock that you're going to talk about is Siemens India. How is this one looking on the charts to you? Because we've seen a lot of these cap good names actually see a sharp rally, then consolidate, then again actually see a good up move. In all of that, where does Siemens fit?
Very good afternoon, everyone. Well, talking specifically about Siemens, why I have chosen this counter, because after a very long period, this counter have seen testing the 200-day simple moving average on the daily time frame. So historically, if we will be seeing the technical charts, then whenever this counter have tested the 200-day SMA, from there onwards, a strong rebound or a strong rally can be seen in Siemens. So even now,
I believe we have snapped the line with Osho. We will get back to him to get his views on Siemens as well and other stocks. But Vamakshi, coming to you then, and Phoenix Mills is the stock also in focus on the back of its Q2 updates.
Well, yes, Vinny, the stock is in fact surging in the trading session today, up nearly 3%. When we talk about their retail segment, that has performed quite well. Total consumption has seen an uptick of almost 20% on a year-on-year basis. They've seen ramp up in leased as well as trading occupancy across some of its major malls. Now, moving on to the hospitality segment of Phoenix Mills, St. Regis has managed to grow its ARR as well as RevPAR, and in fact, the occupancy levels have actually moderated here slightly to 82%. But on the other hand, Courtyard by Marriott in Agra has reported a jump in its occupancy. Apart from that, when we talk about the office portfolio, they're seeing some improving leasing traction as well out here. And as far as the residential portfolio is concerned, that is also seeing very good improvement, and that is mainly backed by strong demand as well as faster conversions. In fact, the gross sales that the company has reported in the first half of the year itself stands at around 433 odd crores, an uptick of almost 155% on a year-on-year basis is what they have noted. So across the segments, what we're seeing for Phoenix Mills is that they have managed to grow quite well, and that is the reason why the stock is reacting positively to that news flow, up nearly 3% as of now.
Okay, let's move on and also talk about Avental, and this stock is in focus, and the share actually hit a new high as well today. It was up as much as 20% intraday as well at one point of time. The main reason for this is the board had recommended to issue bonus shares in the ratio of 2:1. That is 2 equity shares for every equity share held by shareholder of the company, and the record on the record date that was fixed by the company as well. So on the back of that, today we had seen the stock is buzzing in trade as of now, also holding on to gains of almost 18%, and that is Avental for you on the back of announcement of bonus issue of 2:1 ratio.
All right, moving on, let's talk about ITI, and that particular counter has hit a fresh record high levels in today's trading session. If you look at the stock price, at one point in time, the stock was trading higher by approximately 9%, and as you can see it on your screen, that's the time when actually the spike came in the counter, and that's the time when you had multiple block deals of the value of about 1 lakh in each 1 lakh shares actually trade via multiple block deals, and the total size of the block deal were approximately 10.2 lakh shares. So post that particular block deal, you saw the stock spike as much as 9%, hit a fresh record high level. No doubt now the stock is off this day's highest point, but nevertheless trading with gains about 3.8% as we speak.
Let's move on and talk about KPI Green and Vamakshi. Why is this one in focus again today? What's the news flow here?
On the back of its earnings, when we look at the revenue, that has seen an uptick of almost 35% on a year-on-year basis. Revenue has grown from 160 odd crores to 215 odd crores. We're also seeing a marked improvement in the company's operational ability as well, because EBITDA has seen a rise of almost 36% on a year-on-year basis and now stands at around 71 odd crores. Not just that, when you talk about the margins, they've also improved from 32.81% to 33.12%, so definitely an improvement here as well, and that has actually reflected in the net profit as well, because that is seeing a massive uptick of almost 52% on a year-on-year basis, with the net profit standing at around 35 crores for the second quarter. Apart from that, a board meeting is set to happen tomorrow in order to consider a proposal for raising of funds. So definitely that is another factor that could be driving the stock's momentum in the trading session today. But as of now, a good set of numbers optically for KPI Green Energy. The fundraising plans that the company will tomorrow, and that is the reason why the stock is in focus today. As of now, the stock is trading higher by nearly 1.3%.
All right, let's move on and let's get you some fundamental idea from Sanjeev Basin, who is actually betting on the fintech sector. But in that big, rather the fintech sector, the new age tech stocks, find out which are the counters that he's betting on.
We own PB Fintech, we own Zomato, and we own Paytm. We have not got into Nykaa given the extent of competition and margins being slightly on the lower side. But all those three stocks are under our coverage. We think PB Fintech can be a true outperformer along with Paytm. And given the underlying business, I think the overhang of most of SoftBank's holding is over with. Same is the case with Paytm, and Financial was a big key holder. They are now less than 10%. And I think that given the extent of the business updates and how these have become part of everyone's lifestyle, by Paytm and PB Fintech both can be very, very strong players in the coming couple of years.
Okay, that's the view coming in from Sanjeev Basin, but we also have the other stocks that are in focus, and that is Stylum. Now, this one is buzzing away in trade today. We have a note that came in from HDFC Securities. Yesterday, actually, they initiated coverage on Stylum with a target buy rating. Target price of 2,200 rupees per share. What they're saying is Stylum is gaining market share in both domestic as well as the export market, and they expect this trend to continue even going forward. The acrylic segment of the company, they expect that also to see a rapid growth, even though there's a low base, but they are expecting to see good growth over there as well. Capex plan are in place for the company that will be supporting the strong growth, as well as they expect Stylum to continue to deliver industry-leading growth and EBITDA margins. Healthy ratios, return ratios is what they're expecting, as well as the improved value-added mix, which will lead to a re-rating for the company. And that is why HDFC Securities is initiating coverage on this one. Buy rating, target price of 2,200 rupees per share. As of now, stock is holding on to gains of 2.4%.
All right, let's put the spotlight then on Shyam Metallics, because Shyam Metallics also has come out with their Q2 update earlier, a short while ago. And we've seen about 17.7% increase on a quarter-on-quarter basis when it comes to their sales volume. Their sales also, they've seen an increase of approximately 13% on a quarter-on-quarter basis. Not just that, if you look at the September steel sales for the month, or for the quarter, or rather for the month of September, it's come in higher by about 4.6% on a year-on-year basis at about 1.58 lakh ton. While their sponge iron sales was higher by about 23.9%, coming in at around 65,783 tons. So that's the update coming in from Shyam Metallics, and the stock is actually doing absolutely nothing. It is seeing flat moves right now to the positive bias.
Okay, let's move on to the next stock that is in focus, and Dhampur Bio. Ankita, why is this in focus?
That's correct, Winnie. Just look at the stock movement today. It is actually down almost, it's completely knocked out. It's down 8% today. You know, it is on the back of the fact that it is one of the first sugar companies to report its number. But the main important thing is in notes to account that highlights a major dispute going on with the mills in the state and the state government. Now, the molasses levy is already a complex mess, and it is set to get even messier. The UP sugar mills are, they are in dispute with the state government in a matter of determination of levy obligations on the B-heavy molasses for the year of 2022-23, and that is having some monetary implications, on the company. And on the back of that, the stock is completely down and out, down almost 8% in trade.
All right, so that is Dhampur Bio and why that particular counter is in focus. But on that note, we slip into a break on this edition of Market Fatafat. More stocks on the other side, don't go anywhere. Welcome back. You're watching Market Fatafat on ET now, and let's actually connect back with Osho because we snapped that line earlier. Osho, hopefully you can hear us and we'll be able to hear your views right now. Before we go to NMCC, you were talking about Siemens India.
Yeah, good afternoon. Apologies for the technical issue that I faced. So talking about Siemens India, Siemens was having a very strong rebound. Historically also, we have seen a strong rebound from the 200-day SMA, and currently in the previous trading session, we have seen a strong rebound from the 200-day SMA on daily chart. So from here onwards, one can expect a very strong movement in Siemens in the coming period. There will be a first resistance that can be seen around 37,50, and once we surpass the zone, then we can see 3,900 and 4,000 zone in the coming short to medium term time.
And Osho, then your view also on NBCC as well, take that as well.
For NBCC, there has been strong traction from past two trading sessions. I was expecting a breakout because it has formed a symmetrical triangle pattern, and from here onwards one can expect 68 levels to be seen in the very short term period. Overall, there has been a strong consolidation near the 21 exponential moving average, and from here onwards the rally has been backed by strong volume, so one can expect a very decent up move. Immediate basis 68 should be the target, and even if surpass or if it sustains above the same zone, then we can see the positive momentum in the counter to continue.
Alright, so that's the view coming in on NBCC. But Vamakshi, let's talk about Keystone Realtors, or Rustom Ji as we all know it actually.
Stock is in focus on the of its Q2 update. When we look at the pre-sales, they stand at 306 odd crores. Now definitely this is a downtick of almost 33% on a year-on-year basis and 39% on a sequential basis. But when we compare to the first half of the pre-sales, they stand at 807 odd crores. Now this is an uptick of almost 16% that has come in on a year-on-year basis, and this is mainly supported by the sales that the company made in the first quarter itself. Now keep in mind that the company had guided for a 25% growth in FY24 that ranges around to 2,000 odd crores for Keystone Realtors, and in fact they have managed to achieve nearly 40% of this guidance in the first half of this year itself. Collections have also improved to 585 odd crores in the quarter, up nearly 70% on a year-on-year basis and 18% sequentially, so that is a big positive for a developer like Keystone. They've also added one more project with an estimated GDV of almost 1,150 odd crores, and in fact they've completed 5 projects which has a construction of area nearly 3.12 million square feet. So all in all, it does seem like a lackluster update for the second quarter, but overall when we look at the first half of the year, it has been quite good for Keystone Realtors, and that is the reason why the stock is up and away in the trading session today.
Okay, let's move on to the next stock. And Osho, on the technicals, LNT Tech, how is that one looking like? What are the chart patterns now indicating for this?
See, LNT Tech has seen a very strong movement in the last two trading sessions. If we will be talking about yesterday's trading session, even though the market were very sluggish on a negative terrain, overall the market was into, but LTTS have seen a strong traction in terms of volume, and today we have witnessed a fresh 52-week high in this counter. So from here onwards, one can expect the breakout to continue. On immediate basis, 49.50, 49.60 should be the target that one can expect in this counter. And for short-term traders, it is advisable to keep a stop loss of 4680. 4680 should be kept as the stop loss, and on the higher end, we can expect 49.50 to 49.60 in a very short-term period.
Alright, so that is the take coming on LNT Tech. But Osho, we are trying to make up for all the stocks that you missed out in the previous segment. So now Bata India, how is this one looking on the charts to you? Has it come to an attractive zone? Because you can see the stock has only consolidated, mild uptick, then gone back to a consolidatory phase once again.
See, overall the footwear industry is one by one gaining traction. So Bata India being one of the leading players from the footwear industry, it is consolidating near a very strong support zone of 200-day simple moving average. So from here onwards, there has been a consolidation in this counter, and today we have seen the consolidation to get a breakout on a positive note. So from here onwards, one can expect a target of 1680 on immediate basis, and once it surpasses those zones, then this counter has the potential to retest the zone of 1750 in the short-term period. So overall, one should try to accumulate this counter, keeping a strict stop loss of 1580 for the upside, immediate upside of 1680, followed by 1750.
Okay, let's move on to the next one. And Vamakshi, you picked out the Pharma pack for us. I believe there's a brokerage note that has come in.
And the entire Pharma pack is in focus on the back of a brokerage note from Macquarie, and what they have highlighted that there are some drug shortages in the US market, and they are continuing to see a rise out there. The high interest rate is creating headwinds for several generic manufacturers as well, but nevertheless the competition has slightly reduced for the first time in the past decade is what Macquarie has highlighted. And given a confluence of all of these factors, they believe that companies which have a meaningful exposure to the US generic space are expected to benefit from the current disruptions. So their pecking order goes as follows: Sun Pharma, DrRed, Aurobindo Pharma, Cipla, as well as Lupin. So they have maintained the outperform rating on Aurobindo Pharma, Lupin, Alchem Labs, Cipla as well as Sun Pharma, but they've also gone ahead and hiked the target price for most of these counters. They've maintained, however, an underperformed rating on Zydus Life, but they maintained a neutral call for Ipca Labs. So all in all, on the back of this brokerage note, we have the entire pharma pack in focus as of now. Sun Pharma, as you can see, is up nearly 0.2%, but on the other hand, Aurobindo Pharma as well as Cipla are trading lower.
So that is pharma counters in focus on back of Macquarie note. But Osho, let's talk about Patanjali and how is this one looking in the charts to you?
See, Patanjali has seen strong traction in the recent period, because if you will be seeing on the daily time frame, today we have seen a sloping trend line breakout on this counter, and even the resurgence has taken place from 100-day EMA. So that means overall on technical perspective, this counter is looking very positive. Technical parameters have turned bullish in this counter, and once a breakthrough from the zone of 1300, a decisive breakthrough from the zone of 1300 on a closing basis, boost this counter for the immediate upside of 1420 odd levels on the technical perspective. But overall from medium term time frame, one can even expect 1500 targets in this counter.
All right, we just spoke about the entire pharma sector, why they're in focus on back of Macquarie note, but particularly DrRed's had another piece of news because of which it is in focus in today's trading session. If you look at DrRed's, the reason why the stock is in focus is because the company said that an antitrust suit was actually filed against its wholly owned step-down subsidiary, that's DrRed's Laboratories Incorporated, on Friday, and also they say the suit was also filed against other pharmaceutical companies, and this is in relation to Revlimid drugs. So on back of that, you can see DrRed's is trading tad bit lower, 0.7% down. I think also it is actually, I think, losing most amongst its other large cap players as well.
Let's move on to the next one on technicals, and Triveni Engineering Osho. This one on the charts, we've seen a nice uptick coming in the last 6 months, 40% return. How much more upside are you expecting now on from here?
The overall post the recent rally from the zone of 300 towards the zone of 400, the stock has taken some kind of a breather, which can be seen as a positive development, because before going into the next leg of rally, the stock is forming a strong base for itself. And on the technical patterns, it is looking like it is forming a flag and pennant pattern. So any breakthrough above the zone of 390 on a closing basis can give a boost to this counter, and one can expect another 50 point of rally on immediate basis. So one should keep this counter on their radar. Once we see a 350 decisive closer, then from there onwards one can expect 440 to 450 zone in the coming 1 to 2 trading sessions. So overall, very positive sentiments are there with this counter. It is currently hovering above the 21 exponential moving average. So technically it is looking very sound. Once there will be a decisive breakthrough, then from there onwards another 10% of rally can be seen in this counter.
All right, so that is Triveni Engineering for you and Osho's take on that particular counter. With that, thank you so much, Osho, as well as Kunal and Vamakshi and Ankita for joining us on the show and taking our views through all the stocks that are buzzing. And as we wind down on this edition of Market Fatafat, shifting focus to the Adani Group, the company has actually issued a media statement condemning the Financial Times' malicious campaign to tarnish its reputation. The statement alleges the Financial Times is deliberately recycling old allegations to support vested interests. The company has also clarified that they are aware of the next attack by the organization, which is being fronted by the Financial Times, Dan McCrum, who had actually put out a false narrative on the group with OCCRP. Remember, OCCRP is backed by global investor George Soros, who has openly voiced his hostility towards the ports to power conglomerates. So that is the statement coming in from the Adani Group. And with that, it's a wrap on this edition of Market Fatafat. Thank you so much for watching.